the way that the Bank of Canada and the Federal Reserve in the United States, in the United States, the same system, it's a repo system, except for they'll go through like almost $1 trillion a day of actual transactions. Okay. The way that it works is that the Bank of Canada sets an overnight lending rate. So right now they're at 225. What they'll say to all of the institutions in Canada is they'll say, we think you should lend to one another at 225. And the way that they protect that is they say, if you can't find someone to borrow money from at 225, you can come to us. And so they essentially backdrop the interest rate system, right? So if I call up Dan and I say, hey, I need to borrow $100 million in repo, and Dan's like, well, I'll lend it to you at 240, 2.4%. I would be like, no, I'm not going to do that because I can just go to the Bank of Canada and get it at 2.25. You understand? So the Bank of Canada is active in the repo market, but only if people can't get funds at the rate that the bank deems they should get them at, right? If they were going to do anything in the future, it would be to lower rates. As they started to speak and as they started to take question and answers, it became very clear that they were sending the message that if the war lasted longer than what they thought, and oil remained elevated at 80, 90, $100 a barrel, which is super inflationary, that their next move might actually have to be to raise rates to fight inflation. And so it just turned the entire interest rate space on its head. And you go from kind of knowing what might happen to having no idea what's happening. And in the markets, as you can imagine, that just creates chaos and volatility, and volatility scares institutions away and makes it hard for market makers. So we're living in that right now,
And we've seen it in our market, right?
I'm sure.
Anybody who's doing fixed rates or talking to Scotia or TD, or you see the BMO rate sheet every day, those rates have gone up 30, 40 basis points, right? And that's because when they go into this market that Kevin is trading and trying to hedge, they're paying 20 basis points higher.
Mm-hmm.
So they're not taking that loss, they're passing it on to the customer.
Yeah.
Right?
Yeah.
So the variable rate doesn't change because the Bank of Canada hasn't done anything. But the fixed rates, this is where those banks are coming in and hedging portfolios, and every day we're getting different rates on commitments back from our lenders, because every day, for the last week or so, those rates have ticked up higher, right?